Welcome, everyone, to this episode of the Expansive CEO Podcast. I am your host, Hannah Chapman, and today we're going to talk about something that is really fundamental to business building, and that is getting funding and having good business credit and all of these really basic fundamental needs that business owners have when it comes to really having stable finances. Um, but we don't have a lot of times. We don't talk about, people don't know how to create that sense of stability in their business funding needs. So we've got an awesome guest today, Geoff Suval, who is the president and managing director at Xceleran Business Funding Solutions Incorporated. And he and his colleagues help business owners become bankable using an intentional process that can rapidly build business credit and reduce your personal financial risk when it comes to your business finances. A really, really important thing that I talk about a lot as well in Expansive CEO, which is having really clean books between your personal and your business, right? Understanding how they work together, but understanding that they are separate and should be. So the mission at Xceleran Business Funding Solutions is to level the playing field for small businesses and business owners and help them access the credit and capital that they need when they need it and at better rates and with better terms. So, Geoff, thank you so much for being here today. One other thing I wanted to mention before I kick it over to you is that before you were doing this work, you were doing something very similar to what I do in X squared wealth planning, which is helping people build their retirement solutions. And so that experience, right? Like we had that in common and was one of the things that we connected about. And it also kind of launched you into where you are now. So thanks for being here. Tell us more.
Well, it sure did launch me into what I'm doing now. And thank you so much for having me, Hannah. I'm really, really excited to be here. Yeah, just going back after nearly a 30-year career in traditional financial services, your space. Um, I may not have been as successful as you, but I was in your space for a long time. And for the last, I'd say maybe 14 years of my run in financial services, I was a retirement plan advisor. I had my own retirement advisory practice, and it was successful. I had some very, very large clients, and I I won some large engagements, and I needed help from some outside consultants to help me do the work for those large engagements. And as you know, in that world, you typically get paid quarterly and sometimes based on the assets in the plan. And so you have to wait for the quarter to end, the assets to be valued, then you would get your compensation. But I had to do the work before I got paid. So I had a business line of credit that I would use to pay my outside consultants. And every time I would tap that every quarter, I noticed my personal FICO score was taking a significant hit, and I didn't understand why. I was like, this is a business line of credit. Why is it impacting my FICO score? I didn't realize how it worked. I didn't realize how interconnected your business credit and finances and your personal credit and finances were. So it was a really painful lesson. And then years later, when I had transitioned, it was in another business, and I was just looking for another very cool arrow to add to my employer's quiver. I stumbled upon business credit building, and I was more than a little bit intrigued because they solved the problem that I had personally had. And then I saw that they were looking to expand their team. So I applied and was adopted into that family and did well enough so that a few years later, I launched my own business. And here we are. And I couldn't be happy with what I'm doing. And the pain that I felt is what led me here, which I think is another reason why I'm able to connect with a lot of these small business owners that are going through some of the same challenges.
Yeah. And so tell us first, let's just like go, start from the beginning. Why is it important for businesses to have separation between, so like you're saying, like, oh, I thought this was a business line of credit, but what was actually happening was it was tied to your own social security number, right? Rather than the business's EIN and being completely separate. So yeah, tell us more. Like, why is that important? Why is that something we need to think about?
Yeah, that's a great question. And it's interesting. Building real business credit, true business credit on the EIN, it should be business building 101, but it's not. It's not taught in any of these schools. And a lot of business owners have to kind of learn it the hard way. So I engage with successful businesses all the time that were like, this is the situation that I'm in right now because I didn't know how this worked, and it's not taught in business school. Thankfully, I've been a guest on many, many, programs and webinars where I've partnered with different small business development centers around the country, and I've done a lot of education around this topic because it's something that needs to be talked about more because it is so important. But the statistics on small business success are, I mean, not pretty.
Right.
Uh, Nearly 9 out of 10 small businesses will fail over like the first 10 years of their existence. And, when that happens, bad things happen. It's not just the business owner and their family and the employees and their families that suffer. It's also the communities that these businesses had operated in and supported. And when a business fails, bad things happen. And a lot of the times, the bad things that happen financially are because of these personal guarantees that all business owners are asked to sign to get access to the money they need, whether it's the line of credit or whether it's to get into the space that they're operating their business out of, the leases, right? They have to personally guarantee everything. And that's just how it begins. It's always going to be tied to the owners initially, right? While they're bootstrapping everything and building.
Hmm.
And no one talks about, well, you actually can separate. Now there's boxes that need to be checked. You need to have a certain number of years in existence, like generally 3 years is the minimum we like to have. You need to have a certain minimum amount of revenue, and you can do it for as little as $1 million, sometimes even a little bit less than that in gross annual revenue. And then you need to have your business credit scores and your business FICO SBSS, which stands for Small Business Scoring System, score above a certain amount. And that's tricky because every bank can design their own FICO SBSS. So it gets complicated. But when you know what to do, it's not complicated. It's a process, and it's a very intentional process. And there's frankly just so much to know that it's too much for a successful small business owner to try to manage. And if they're trying to do this themselves, there's just too many potential pitfalls that can get them in trouble and complicate things. So a lot of the times, Hannah, when I first meet with, or I'm introduced through one of my affiliate partners to one of their relationships, the business owner has already tried to secure funding or financing, and they may have applied for something in the wrong order, or they did something incorrect, an honest mistake, but it complicates their situation further. And so we have to sort of wait until things get sort of expunged from the record, or we can clean some things up before we can actually do it the right way. And so there is really a process that needs to be followed, and you really need to know kind of the order of what to do. So,
Hmm. Yeah. And to come back to that point of like how many small businesses fail, like according to SCORE, a small business mentorship program, right? 82% of small businesses fail and cite cash flow problems as the main reason. 82 is not like, oh, kind of like a majority. No, that's like almost all.
yeah,
That means very few people are like, man, I just got bored and I didn't want to do it anymore. That's 18% of people.
yeah,
The other 82% are citing cash flow problems. And so I also really appreciated, and we'll come back to like the process and how you get there, but let's like I want to drill down more still on just the why of like what's going on. And I really appreciated what you've explained a couple times before we were recording about like it really does come down to cash flow, whether like kind of no matter
Yeah.
no matter what the growth problem is, there is a certain what do I want to say? There are things that you can do as the business owner, and I focus a lot on, your mindset and healing your relationship with money, in a lot of ways, and being who you truly are, aligning with your true energy of like how can you be the most you so that building your business feels the best. And then from there, it really is cash flow, right? Like the other aspect, like the big overarching thing is, can you afford to pay for everything else that you need, right? So let's talk about more about that for a minute.
Yeah. Most business owners, to your point, they actually know what they want to do, um, which is great. I mean, having like a business plan and knowing, where you want to get to, it's critical actually in becoming funding ready, right? We talk about funding readiness, which is a big part of our process. That's a critical part. So like the blocking and tackling of being successful in this program is you got to have a business plan. You need to have your financials organized because any of these lenders that are going to be asking for requirements so that you can actually get access to whether it's sort of band-aid bridge type funding or financing short-term stuff or the longer term solution like a non-recourse business line of credit, they're going to want to see your financials. And if you can get them what they ask for quickly, believe me, they're watching, right? If you're scrambling
Right.
around, you're sending them like Excel spreadsheets, they're like, what? Like, is this a real business? And so, getting your financials organized is really, really important. But then there's so much information about our businesses available, like in seconds online. And
Hmm.
so before you can even talk to a lender, that lender is checking you out, right? They can find out an awful lot about you in seconds and they can determine, whether you are credible and what your reputation looks like, right? And so how you show up is really, really important. And that's a big part of our process. That's actually, there's four legs to the bankable table, and completing all of these items of lender compliance is one of those legs. And we can go back and talk about those four legs. But so reputation and credibility is a huge part of funding readiness. And then, having an actual go-to funding market strategy is
Hmm.
critically important. Like, for instance, if a business owner says, like, I need $500,000, okay, it's a lot easier to get $100,000 from five different lenders or sources of funding than it is $500,000 from one. And so, you think you know what you need. Well, let's figure out the best way to go about and approach the market to get you that, to increase our odds of success. And so having that go-to funding market strategy is really important. And that's part of our process too. But it is a process, right?
Right.
Um, and to get through the the ultimate process of becoming bankable, which is really the goal. Like once you've been through a very intentional process and you've checked all of these boxes, that's when you actually have the solution. And that's when you'll always have access to your point earlier of what you need, kind of when you need it, at more attractive rates with longer and more manageable repayment terms. But there's really four things that have to be done to get you there. And I'm happy to cover that if, okay.
Yeah, yeah, yes. If you are open
Okay.
to telling, yeah, look, what are those
Yeah.
four things?
Yeah. The secret sauce. Okay. So the four legs, the first leg I already talked about, it's those items of lender compliance. And there's about 20 or so items of lender compliance that need to be checked. Because banks, lenders, they share information. They know what types of businesses and which characteristics have demonstrated a higher risk of default. And so they know what they want to stay away from. And so they're checking to see if these businesses have those. Like if you're using a free email service, like a gmail.com or a yahoo.com, or heaven forbid you're still using an AOL.com for your business. They're like, well, that's
Right.
not a real business, right? So like,
Okay.
but they check, there's about 20 items or so of lender compliance that need to be addressed. And so that's the first part of our process. And those items, what people don't understand is when they're going to a lender to get funding or a loan, they have to understand that those lenders, they don't hold on to that loan. They actually sell that loan on the secondary market. Okay. And so they want to check your business, and they can in seconds without even talking to you, just by looking at what they can find out about your business, rapidly online. They can determine if your loan will conform by
Mm.
looking at these lender compliance items. And if your loan won't conform, you will not be approved, because if it doesn't conform, they're not going to be able to group it with other loans and then sell it as a package in the secondary market. And
Okay.
so you got to hit these items of lender compliance to even get through. And that's the first leg. The second leg is you have to have something called comparable credit. And you have to have enough reporting business credit trade lines. And by reporting, I mean reporting to the business credit bureaus, which are different than the personal credit bureaus. And only about 7% of lenders and vendors and issuers of credit report to the business credit. Well, they all report to the business credit bureaus if you're late. We want to work with vendors that will report your timely payments, like your on-time
Mm.
payments. And only about 7% report your good behavior. So you need to have enough reporting business credit trade lines of like your good behavior and comparable credit. And comparable credit is just, which is the other part of the second leg, is just, if you're seeking $50,000 of, in funding, have you ever had $50,000 before? And if so, how'd you pay on it? If you have, then you have comparable credit. And there's ways of building that pretty rapidly as well. The third leg is having strong business credit scores. And there's two types of business credit scores. You need to have strong business credit scores with the business credit reporting agencies, Dun & Bradstreet, Experian Business, Equifax Small Business, and you need to have a FICO SBSS, which I mentioned before, Small Business Scoring Service score north of 160. And the scale for your FICO SBSS is 0 to 300.
Okay.
Your business credit scores typically need to be above a 70, 75 is better. The business credit score is the easy part, right? That's just paying your bills early. That's what
Mm.
gets your business credit score up there. The FICO SBSS is complicated because every bank has the ability to design and weight their own. They look at the same criteria, like how the business credit of the owners they can look at, that can be up to 30% of the score. Your time in business, your industry, your web presence. They can look at your gross annual revenues, debt to income ratio, your bank rating. They look at all of those things, but they can weight them differently based on their own experience and appetite for risk.
Mm.
What that means is that your FICO SBSS score is very likely going to be different at Wells Fargo than it is at Bank of America, than it is at PNC or any of the local banks, right? And so you need to know what goes into that lender's FICO SBSS score, and we can coach to that. But you got to be above 160. To get true separation, it actually helps be above 200. And then that's the last leg is leg 4, which is having a bank rating of at least a low 5. And that has everything to do with the average balance in your business general ledger account. And people are like, well, how do they know what my average business account balance is? There's something called the Small Business Financial Exchange. Our businesses don't have the same privacy protections as we do personally. The Small Business Financial Exchange is able to look into your business's bank account and see how much money has flowed through there over the previous 90 days and how much actually stuck to the business. They can't see what you've spent the money on, but they can see how much has flowed through there. And the reason why they're given the ability to do that is they need to know your business's ability to service debt. So if you're seeking a loan that's going to have a $1,500 monthly repayment, for instance, yet you have less than $500 on average in your business bank account, they're like, how are they going to service this? So what do you think is
Yeah.
going to happen? They won't be approved, right? So you need to have at least a low 5 which is essentially a $10,000, average account balance in your bank. And there's ways to sort of get there less painfully, more painlessly as well. But those are the four legs, and it's a lot. But, once you know what to do in the order of doing things, it's manageable, but it is a process.
That's so interesting. Like I didn't know that, yeah, that there were like fewer privacy protections,
Yeah.
um, banking
Scary.
wise for businesses. Yeah, no, that's new to me. Yeah, that's very interesting. And actually, mm, heightens that desire for that separation, right? Of
Yeah.
like, okay, well, that's the business, like keeping it separate, keeping it again, just clean. We're
Yeah.
not.
I mean, there have been periods in the not too distant future where, strong businesses, strong one day, um, you know, got in trouble quickly and were taken out. Going back to the financial crisis, right? 2008, 2009,
Yeah.
a lot of great businesses that were taken out. COVID, just, 5 years ago or so, like you had some great businesses that pretty quickly everything turned negative for them. And when you are subject to these personal guarantees, you can lose your house, you can lose your other assets. It can be devastating. And so, when you build your real true business credit and you can separate it from, yourself personally, if the business does go sideways or south, yeah, it's unfortunate, but it doesn't have to take you down personally, right?
Hmm.
You can, you know, live to fight another day, right? Start another business, right? And then maybe build your business credit from the beginning, right? Because you know that these things can happen. Um, a lot of my time is spent, Hannah, educating other business professionals on how this actually works. And you'd be amazed at how many of the top, accounting firms and accountants, and fractional or other, CFO advisory professionals have no idea how this works. They simply don't. They're like,
Hmm.
well, it's all about cash flow and your balance sheet. And it's like, well, yeah, that's important, but there's a way to actually, build your business credit without, having incredible cash flow from the beginning. There's things that you can start doing from the beginning that will allow you to do this and get this separation more rapidly. Um, you know, Bigger businesses, and I'm talking 25 million and above, they just have access to, more resources and certainly, and even education than the smaller ones. Like these small businesses like you and I, like they just don't have access to the same information or resources. And so one of the biggest goals of my business is, sort of leveling the playing field and bringing these big company and, everything below 100 million is considered small, but I don't
Right.
consider it small, right? I mean, but we can go really, really small. And when you bring sort of this information and this education to these small businesses, it's amazing what they're capable of doing, once they know how it works and once they have access to what they need to execute their plans. So,
Yeah. One question that popped up as you were talking, in my mind was like, can anyone go check and see if they have a business credit score? Like, can we go to Dun and Bradstreet or, like you can, anyone who has a cell phone and a bank app now, right? Like you can check you can check a version of your credit score pretty often, right? Like it's not the full thing. It's not going to be the same as if you apply for a mortgage or a car loan, but you can get like an idea of that roundabout where you're at. Is there something similar? Can you do that for your business or is it like more
no,
shrouded?
there is. I wouldn't go, and this is just personal preference. I wouldn't go directly to Dun and Bradstreet because they're going to try to sell you on all their stuff. And one of my clients did notice that Bank of America is offering this program where you get your Dun and Bradstreet score, but it's not the score that matters. It's not the Paydex score.
Mm.
It's like other Dun and Bradstreet risk scores. I think they're trying to sell you other stuff. And so reaching out to Dun and Bradstreet, they're going to try to sell you on other stuff. Nav.com is a service that will allow you to, I think it's like $40 a month or something, but it'll give you access to your business credit scores for the three major bureaus. And it's paid. It's a paid service, but that's something that we do recommend so you can kind of see your progression on your business credit building journey. So that would be the one that we've had the best experience with nav.com. Of course, they'll try to sell you other stuff too, but they do a good job of monitoring your business credit score.
Okay.
Yeah.
Interesting. Interesting. And another thing that you had mentioned was you've said a few times that it's a process. Um, and like I think most things in life are like that, right? Like we don't have immediate success. We don't have immediate change, right? You can start to do things right away and help build your bankability of your business and all of that. But ultimately it's going to take some time. How long does that usually take for people?
Generally, to become bankable, 6 to 12 months. Um, less time, more on the 6 month scale. If there's stuff that hasn't been done by mistake that complicates things,
There's not cleanup to do.
yeah, there's less of that needs to happen. 6 to 12 months is a good. When we are doing live coaching for somebody, we give them a year of live coaching. It shouldn't take more than that. Um, the other part of our business is helping people get short-term funding. You can do that quickly. But that's not, again, that's sort of just a Band-Aid. That's to cover a need if you're in a bit of a pinch and you don't have access to other things, because this is a tough environment, right? Like lenders,
Mm.
their appetites have tightened quite a bit. And so lots of other types of institutions, private investors have sort of filled the gap. Like, banks 2 years ago were approving almost 50% of applications. And then, a year later, they were down to like, less than 10%. I mean, it's
Wow.
crazy. So, but other sort of private equity backed entities have sort of filled this gap. But, those companies are going to be charging a lot higher interest because that's how they make money. So you can get access to some of that Band-Aid, non-bankable type funding quickly. But if you're going to do that, we would highly recommend that you engage with us or somebody like us to go through the process, which should take 6 to 12 months. I also want to be, candid about sort of the success rates. And I haven't measured this, but I suspect the number I'm going to throw out is about accurate, pretty accurate. We're not a magic pill, right? It's like if you sign up with us in our coaching, you're not just fixed, right? That's the beginning of your business credit building journey. You now need to meet with your coach and go through the process.
Hmm.
And I would say only about half of the companies that engage with us remain committed enough to their goals of getting through the process to actually have success. The others, they get busy with their business. There's an excuse. They miss a meeting with their coach, and then they miss another one. And next thing you know, they lose momentum. And it's not going to be successful for them if they don't go through the process. And so our ideal client is one that is just committed to getting to the end of the process, because they understand that once they're there, they can then execute all the awesome things that they got into business to do in the first place, right?
Hmm.
So they have to remain committed to the process, but it will work if they do.
Well, that's all. I mean, it's also pointing to harkening back to something you said before that, like, you have to start the process before you really need it. As far as like, if you're in like a true cash crunch, if you were like desperate for funding, not for growth, but for like covering current expenses, right? Like, then it's kind of too late
Yes.
in that current moment. Like you have to get through that current issue and get over the hump there, and then you can start. But yeah, it's like this journey of building the business credit and building the bankability of the business. Like you have to do that before you are in desperate need. It can't
Yeah,
you can't wait until the last second, right?
exactly. It makes it much easier. And I would say, again, I haven't measured this, but a year ago, of the companies that I would engage with, only about 20% needed money or funding now. 80% were like, no, 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 I'm just doing this because I need it in, a year or a year and a half to, buy the building or, to do other things that were part of their longer term strategy. So they wanted to do what was needed now so they'll have what they needed at the time. Honestly, Hannah, it's almost like that's flipped, and it's like 80% now need money now because of what's going on. And a lot of the times they're not getting a lot of the businesses I'm engaging with now, they need some short-term relief because they've done work that they're not getting paid on timely.
Mm.
They still have to meet payroll and pay their rent, and their operational expenses are still, they need to be met. And so it's like it's almost flipped. Now it's like 80% need something now, and only 20% are like, I'm good now. Like we'll just, I want to do this for long term. But to your point, yes, the sooner you begin going through the process, the sooner you're going to have that solution. And so there is no benefit to waiting. You want to get started now. And once you get through the process and you are now bankable and ready for the good stuff, you still need to remain bankable, right? Once you're there, it's like, okay, awesome, right? You still got to pay your bills on time, right? You
Right.
still got to like operate your business like a responsible business and work with professionals like you that are going to help them with sort of other things that they need to do to, be successful and accomplish their other goals, right? And so, it's not like a one-time thing. It's an all-time thing.
Yeah, and that really, my clients in X squared, again, I work mainly with, business owners, entrepreneurs. Um, we are constantly holding those two, um, symbiotic is the word that's coming up, but that's not the right word. Like they go to the long-term goals and the short-term needs, right? That it's how do we hold both of those at the same time so that we're making decisions in the short term that are helping move us towards your long-term
That
goals.
longer term.
Because you can, I mean, like in the short term, you can make lots of different decisions that, maybe are not aligned, or won't help push you forward to your longer term goals, but they'll be the band-aid right now. And we just have to be mindful. And I think for people who haven't gone through the financial planning process, for example, they don't know, right? Like the long-term goal is very amorphous for a lot of people. Like they have an idea of like, I want it to be like this, maybe, or I don't even know what it could be like, so I don't know how to envision that. And so what do we do as humans? We all just focus on, okay, well then what's going on right now? Right? So
Yeah.
I'm just gonna like do what's going on right now and do the best I can.
Yeah. And hope things work out down the road.
And
Yeah.
hope
Yeah.
things work out down the road. Right. Where, that's one of the biggest benefits, I think, of that process is no, let's like actually build out that vision. Let's actually build out the roadmap because there is, right? It's like you could like walk out your front door and be like, I'm gonna go to, Denver. I'm gonna walk. I'm just gonna figure it out as I go. I'll like eventually people will help me find my way. Maybe I'll
Yeah.
pick up a bike. Maybe I'll, hop in a bus. I'll get there. You'll get to Denver, sure, but it's a lot easier if you like
Yeah.
plan the route ahead of time,
Have a
right? And you're
map.
like, okay,
Yes.
yeah, so we know we want to go, on these highways. We want to take these modes of transportation. This is going to get us there the most efficiently, or this is going to be the scenic route because you want to take these little like detours. All of that's fine,
Yeah.
but it's a lot better than just walking out your front door and being like, I think I need to head this direction.
Yeah, totally. Well, let's talk about that ultimate destination, right? A lot of business owners are already thinking ahead and they're thinking about, the exit. And a lot of them are in business, to get to that. And they're in business because they offer something, a product or service that they think is better than was available, and they think they can do it better, or they want to provide a better life for their family, whatever their why was. But ultimately, they have a number in mind, or at least a time in their life in mind where they'd like to exit. And you probably know that only a small percentage of businesses are successfully sold.
Hmm.
It's like less than 20% or so, which is
Yeah.
crazy.
Yeah.
And
Some
so
numbers show 10.
yeah, it's like and people are like, well, I'm just going to sell. It's like, really? It's not as easy as you think, right? And so, one of the other real benefits of having a bankable business with access to working capital that's not attached to an owner, it helps in a couple different ways. Let's just think about a family succession business, right? That wants to, one generation is ready to move down to Florida or Arizona, right? Or somewhere sunny, right? And go off into like the retirement sunset. And then the next generation is going to take over the business and run, operationally, be responsible. Problem is, in most cases, junior isn't credible enough, and they're certainly not, bankable. And so mom and dad are still on the hook for all the business's access to money, right? The bank's like, no, 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 junior's not credible. So mom and dad are still on the hook, right? And they're personally guaranteed for all of that stuff. So if you've gone through the process and you've separated that, and now the business can stand on its own, and the EIN has access to money, mom and dad can go off into that retirement sunset with a lot less worry and stress, and the business can still operate and stand on its own. When it's not a family business, but we're talking about an outside sale, and there's lots of businesses like private equities aggregating lots of these businesses these days, as are just other buyers in general. And if you're looking to sell your business and your business has access to capital that's not attached to the owner, that makes that business more valuable all day, every day, because
Yeah.
the acquirer now has access to money to immediately, continue with their growth strategy, right? And if they're comparing two different businesses in the same geography with the same types of customers, right? They look virtually identical, but one has access to like a big chunk of money that's not attached to anybody, and the other one doesn't. Which one's more attractive? Exactly.
Right.
Access to money. So it makes for a more successful exit.
Yeah. Yep. And once again, anyone in the M&A, the mergers and acquisitions space, they will tell you the same thing, right? That this is not, it's not, hey, I want to sell my business next year. Let's let's figure it out. Like, why weren't you here 4 years ago, right? Like, you really do need to give yourself a good 3 to 5 years to go through the process and to make sure that your business is ready for that next wave of leadership to come in and be successful, because that's what makes for a successful exit as well. And so I love that the overarching, or maybe the underlying, maybe it's both, message of this whole podcast is that, like, time, you need time, right? And um, it's important to go through the processes, right?
Yes.
And really like be in the journey of, these different phases of your business. Like, commit to the journey, commit to the process, whatever it is you're doing, in order to, get to that bigger, I don't want to say up level or bigger, next level necessarily, but just depending on what kind of business it is that you want to run, and the people that you want to help, and the scale at which you would like to do that, right? If you want to work on a bigger scale, on a larger stage, that does, necessitate more funding. That means more money will flow to and through your business. And you have to have the right You have to have the right containers for
Yes.
that. And that's what I'm hearing most of all, is that like it's just another aspect of building the right containers, building the right capacity
Yep.
for you to be able to allow yourself to receive more
Yeah.
revenue, more income, let it pass through you into these right places.
Yes. It doesn't just happen auto magically.
Right. Yes. Yes. And I mean, we talk, I am a deeply spiritual person. I have a lot of, you know, respect for, you know, the processes and the mindset work. Um, and in order for that abundance to have a place to land, it needs to have a physical space to pass through properly. Right.
Yep.
So we need both sides. We need to have the openness to receive that much abundance, and we need to have the accounts and the
Yes.
loans and the lines of credit for that money to pass through in
Yes.
this, tangible world.
Absolutely. Yeah. And you need to have the right, connections, meaning company, the people with you on that journey, right? When you were talking, I was thinking about this cartoon that I just saw recently, Big Panda, Little Dragon, and Little Dragon's on Big Panda and they're walking off to the sunset. And Big Panda said, which is more important, the destination, the journey or the destination? Uh, and Little Dragon said, the company. And so you need to have those people and those connections that are helping you along this journey. And that's a lot of what you and your awesome model does and what I'm trying to do with my business. So, um,
Beautiful.
yeah,
I love that. And it's so true. It's so true. You don't want to go the journey alone.
yep.
It's better with friends. Well, with that, Geoff, if someone's listening and they're like, well, that's the next step. That's what I'm looking for. That's what I've been trying to accomplish. How can they get a hold of you? And where's the best place for them to learn more?
Yeah, well, the best way to get a hold of me is through my email, and I guess I'll be able to provide this to you, but it's gsuval@xbizfunding.com. And I'll also provide my company's website. And on that site, Hannah, there's this awesome uh, tool that will allow any business or business owner to take 7 to 10 minutes and run a free business success scan. That first leg that I told you about, those lender compliance items, this will actually show these businesses exactly what they look like right now in the eyes of the business funding world. It'll show them where they look good, as indicated with the green check. It'll show them where they fall short with a red X. They can click on that and it will tell them what to do to turn that red X into a green check. And they can do that just to see what they look like. I promise I'm not going to call anybody. If they want to reach out to me after running that scan, they'll have my contact information. They can do that. But it's a great, great resource. And it's a great jumping off point. And if they need access to funding, now we can, have that conversation too. But I'll make
Well,
sure you have that contact info.
yes, all of that will be in the show notes. You can just copy paste, go straight to the website and check it out. Geoff, thank you so much for being here today. It's such an important topic, and I'm so grateful to have you along the journey with me too.
Oh, Hannah, it was my great pleasure. Thank you so much for having me. I really enjoyed it.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.